So now let's have a look at 5 major accounts and the examples of the nominal codes available. One of them was income. Income is an increase in economic benefits, which can be a regular business income, sale of goods or services, or non-regular income, so not something that is consistent, sale of machinery, for instance, for extra cash. The common nominal codes we use to record income received, it's either sales for the business regular income or other revenue for sale of equipment, let's say, or interest and income that we receive from savings on a bank account. The next one is expense. Opposite to income is a decrease in economic benefits, which are expenses overhead spent to run a business. So these all expenses are related to running a business, such as rent, internet, telephone, broadband, payroll, postage, cleaning, professional advertisement. Can be so many different expenses. And just to mention before we go into reporting, which is in the next section, sales less expenses equals profit. But we also can have a loss if we sell less than we spent for the business, right? Therefore, this report called profit and loss account. Asset is an economic resource controlled by a business. So our business own assets. They belong to the company. They can be in 2 groups, current assets and non-current assets. The current one are liquid and ready available for business needs. As soon as we need cash, we can use those current assets. Examples are cash, inventory, or goods for sale, monies due from clients, such as receivables, and prepayments. And typically, the current assets are quite fast in usage, so they're less than 12 months old, typically. If you have monies due from clients for more than 6 months and they're still not paying, it's most likely not going to pay and you have to write off these monies. Nevertheless, non-current assets are long-term held assets. So typically, you would buy equipment or machinery or buildings or land, or you would hold trademarks and patents and goodwill for more than 12 months. So it's a long-term investment. And here we have 2 clear groups. Assets that are fixed or tangible, and assets that are not fixed and intangible. And the difference is, as you see from the list, equipment, machinery, buildings, laptop, cars, all of it we can touch, we can see. So it's a physical item, right? And with trademarks and patents and goodwill, we cannot really physically touch the product. So it's intangible. It's not possible for us to touch. And therefore, it's called intangible asset. The next major item is liabilities. And liability is a present obligation of a business to give an economic resource to another party as a result of past transaction. So we owe some money or something to another party. Similar to assets, this can be current, due within 12 months, or non-current liabilities. Those are due for payment after 12 months. And examples are for current, salaries, tax payments, amounts that we due to our suppliers, overdraft repayments, because they have to be quite fast. Normally, it's not similar as a bank loan. You have to make payment within 30 days as minimum. Non-current liabilities are bank loans over 12 months or long-term, any provisional payments, any long-term repayments, and so forth. Last but not least, we come to the 5th and the last major account, which is called equity or capital. And it is an amount which the business owners or shareholders have invested and they owe this money back. Typically, if the business is making profit, shareholders will receive an annual dividend, which they will have to report and pay tax on. So let's wrap up this section of chart of accounts. As we have just discovered with 5 major accounts, we have revenue or sales and expenses on one side. And I said revenue minus expenses, we will get a profit. And therefore, we get profit and loss statement, because we can also make a loss, right? Profit and loss statement is typically run through the period of time. So let's say we have profit and loss from 1st of January of this year until 31st of December of this year. And with balance sheet items, we have learned three major items, right? Assets, liabilities, and equity. And with balance sheet items, we should receive an accounting equation. Our assets should equal liabilities plus equity. And balance sheet statements are typically run as of some date. So let's say we decided to run balance sheet as of 31st of August 2025. And so we'll include all transactions up to that particular date.